Okay, let's talk about the AI stock boom, because this isn't just some passing trend. It's a force so powerful it's completely reshaping the market, and it all boils down to a nearly $500 billion question about our future. So, what is really going on here?
So to get a sense of the scale we're talking about, get this. The Magnificent Seven, the big tech companies at the absolute heart of this AI revolution, they now make up a full third of the S&P 500's total value. Just think about that for a second. The fate of just 7 companies has this enormous influence over the entire stock market. And yeah, probably your retirement account too.
In this quote right here, it just hits the nail on the head. Every single day, billions of dollars are voting on the future of AI. The stakes are just incredibly high, and it creates this massive tension. Are we watching the dawn of a new tech reality, or are we just caught up in the hype of a bubble about to pop?
All right, so let's dig into just how deeply this AI boom is driving the entire market. For the last couple of years, AI has really been the main engine of this bull run. And what that means is, whether you think you're a tech investor or not, your portfolio is becoming more and more tied to how well AI does.
And we're not just talking about a few famous names. I mean, just look at some of the top performers in the S&P 500. You've got data storage companies like Seagate and Western Digital. They're essential for all this AI stuff, and their stock has nearly tripled. Software firms like Palantir more than doubled. The ripple effect is absolutely huge.
So what is actually powering this incredible surge? It isn't just blind optimism. It really comes down to cold, hard cash. The real rocket fuel for this whole thing is just a colossal wave of spending.
And the answer is surprisingly simple: infrastructure. You've got giants like Microsoft, Alphabet, Amazon, and Meta pouring unbelievable amounts of money into building the literal backbone for AI. We're talking data centers, specialized chips, the whole shebang. And that spending is what's making revenues explode for all the companies that build this stuff.
And the numbers, oh boy, the numbers are just staggering. Citi analysts recently bumped up their estimate for all this spending to $490 billion. That's not a typo. An investment on that scale is what's feeding this whole narrative that the demand for AI is basically endless. And get this, government policy is basically throwing gasoline on the fire. A recent tax bill now lets these companies write off their huge investments immediately. That frees up even more cash, which you can bet they're just plowing right back into building more AI stuff. It's a really powerful feedback loop.
Okay, but here's where things start to get a little weird, and maybe a little risky. All of this interconnected spending is creating this really unique situation, what some are calling a circular ecosystem, where the lines between who's an investor and who's a customer are getting super blurry. So, what on earth is this circular ecosystem? Well, think of it like this. A big tech company invests a ton of money into a hot AI startup. Then, that same startup turns around and uses that exact same money to buy hardware and cloud services from, you guessed it, the big tech company that just invested in them. Let's walk through a real-world example, because it makes it super clear. NVIDIA, the chip giant, says it's going to invest a huge amount of money in OpenAI. Then, what does OpenAI do? They take that capital and use it to buy NVIDIA's AI systems. You see, it's a self-feeding cycle of investment creating revenue.
So, what's the catch? The big risk here is that these deals aren't guaranteed forever. They're built on this super optimistic environment we're in right now. If that mood sours or if business priorities change, that circular flow of cash could slow down or just stop. And if the music stops, it could have some pretty serious consequences for this rally. And that leads us to the other big, scary question hanging over all of this: the fear of a bubble. I mean, with stocks going up this high, this fast, you just have to ask, is AI priced for absolute, total perfection with absolutely no room for error?
And this quote, this one really sums it up perfectly. The valuations for these companies aren't just baking in AI as a growth driver. No, they're priced as if AI is the only thing that matters. And that's a belief that carries a tremendous amount of risk if things turn out to be even a little less than perfect.
And yet, for all that risk, the market has been unbelievably resilient. I mean, there have been moments that could have been a real problem. A Chinese startup made a super efficient AI model, which made people question all the US spending. An MIT study found that most corporate AI projects weren't actually making any money. And each time, what did investors do? They panicked for maybe a day, and then they just kept on buying.
So you've got these huge risks on one hand, and this incredible, seemingly unstoppable optimism on the other. It all comes down to the big question: is this boom different? And to try and answer that, let's compare it to the most famous tech bubble of all time, the dot-com bust.
And wow, when you put them side by side, it's like night and day. The dot-com bubble was fueled by debt, built on companies with shaky foundations and, a lot of the time, zero profit. Today's AI boom, it's being paid for with cash, by companies that have some of the healthiest balance sheets the world has ever seen.
And that right there is probably the single biggest difference. The giants funding this whole AI revolution, your Microsofts, Amazons, Googles, they have massive, wildly profitable businesses completely outside of AI. That gives them this huge financial cushion, a safety net that just did not exist back in 1999. It could absolutely help them weather the storm if AI sentiment suddenly takes a nosedive.
So where does that leave us? Look, there's no doubt that the AI boom is real, and it's being bankrolled by the deepest pockets on the planet. But the ultimate question, that $490 billion question, it's still out there. Is this the foundation for a sustainable, world-changing engine of growth? Or are we just watching the creation of the most expensive echo chamber in history?